Hi, welcome to the Market Alert for Friday, the 19th of August 2022. So stocks stumble, memes mauled in sleepy session fit for Sandman. If one had to describe today's session with one word, it would be sleepy. So maybe they're waiting for the options expiration. US stocks finished mildly higher and the dollar strengthened amid encouraging data. So, different opinion there. Dollar surges versus euro pound after strong US data. And Schnabel's warning of Europe. I think he's talking about it's a basket case, which we already know. Beyond boring equities, big stuff is moving though. Some vols are picking up, so volatility picking up. We're getting towards the end of the school holes as well, so we'll start to see things pick up during the next week. Waiting for the expirations, you can see there again alluding to how sleepy yesterday was. After boring comes, well, yes, a lot of volatility, so fingers crossed we might start to see some today. Economic news today to help? Well, not a lot, to be honest with you. Nothing there at all that I can see that's going to help. Apart from the UK public sector net borrowing, we'll see what that is for the month. I think 25 billion is what's forecast, but really not a lot to move the markets there. Gold-silver ratio moving sharply to the upside, as I spoke about earlier in the week, that silver would start to see its decline again as soon as the stock market moving to the upside, and that's certainly been the case for the last few days. So where are we? Let's start off with the Dow. We're still green at the moment, but starting to look weakish as we're getting lower highs each day. Options expiration today for the stocks, and the 200 MA in the way there. So if we do break the 200 MA, these are the downside targets for the Dow. On the upside though, always look for this as well. We've got from here down to this low of the bar following, and that would give you the upside, which is not a lot there, as you can see. What I would do in this case is just watch the high of that will be Tuesday's price bar, Wednesday, Thursday, yeah. So Tuesday's high is what I would keep on the radar there. But like I say, yesterday, very quiet. Market selling off, coming back up to the DP, then retracing 89% with demand. Momentum switching to the upside, and they brought the market back 89% there. And it's moved lower, below the DP, sitting at the 200 MA in the 30-minute chart as well. Watch the low if the market does have a bit of a sell-off. Very important low that the market holds at this level. Meanwhile in the DAX, because of the political issue over there and the war, and there's also on the Sky News website this morning a threat of an attack against a Ukrainian nuclear power plant, and the Russians have said, for everybody to stay at home now. Whether this is just grandstanding, who knows, but God forbid that there is an attack on this, but something that is being made aware on the mainstream news this morning. So hence the weakness in the DAX, looking more weaker than the Dow or the US markets. So yeah, the market's sideways at 62%. Watch the 20 bar moving average. We've already closed below the 5 bar, and we've got the 50 there as well, tying in with the 78 and 89 should the market move lower. The 30-minute chart for yesterday, we saw a move to the upside. It was no stopping it after the down day on Wednesday, but the market coming back and then trying to move back with the US, and then overnight already below the DP and heading for yesterday's low. Not far off this at all, only a matter of 30 points there. And in the S&P, first red bar for a while, closing below the 5 bar moving average, crossover in stochastics and overbought, and the 200 MA in the way, and 78% retracement as well. Looking weakish, like I say, overnight. So these are the downside targets should we take out Wednesday and Thursday's low. Look at that in more detail in the 30-minute chart. So there's your two lows there. If we take those out, then we're going to move lower in the daily chart through these numbers here. So back to the 30 minutes. Yesterday the market, same as the DAX, moving higher and holding better than the Dow did when the retracement only retraced about 62-78%, then back up and breaching the high, whereas the Dow didn't. and then moving lower overnight below the DP. And like I say, keep an eye on the S1 and the low for this market too. In the FTSE 100, still looking strong out of all of the markets. Still no red bars since this one. So we've had 1, 2, 3, 4, 5 days, but looking a bit more weaker overnight. 89% retracement, certainly well overbought, and divergence needs a pullback. So the 30-minute chart showing yesterday's move to the upside, strong move despite the inflation figures from Wednesday. And overnight, a bit of a spike up and then moving lower, but above the DP and the 50 bar and 200 at the moment, unlike the German DAX and the S&P. In the currencies, the yen is a bit of a sideways move at the moment, probably waiting for the US decision on interest rates, which is going to come in September. It's just trading sideways, isn't it? If you look at the 30-minute chart, some nice moves in the smaller time frames though. Nice move to the downside after being overbought with divergence and supply and a crossover, and then the parabolic changing. Overnight, the market's just retraced to the DP, got a double top there, and then moving back to the close, bouncing off the close and trying to get back above the DP there. Meanwhile, the pound got hammered yesterday as the dollar moved higher. We went through the 62% retracement. We're now sitting just above the 78% there. Still a long way to go to be oversold. And I would imagine that they're going to continue to move this market lower until we see the interest rates increased again in the UK. 30-minute chart of the pound, you can see the sell-off there when the dollar kicked off in the US. And the metals market also getting hammered as well at this time, which we'll take a look at now. So in the silver market, straight through the 89% retracement and the 50% retracement, already heading for the 62. Like I say, we're going back down to 89, if not back down to the low here to retest it and see if there's any buyers down at $18 level. At the moment we're at 19.30, so it's a piece of cake to move the silver market down to these levels. So let's remove all of these other fibs, keep these. And yesterday's 30-minute chart, you can see that when we kicked in the 1 p.m. is here, no activity really, started to try and sell here, but got a bit of an 89 bounce at the DP, and then the selling hit hard and has continued overnight, which you can see there, which is why the gold-silver ratio is currently up. Gold also declining there. Also through the 50, watch the 62% retracement at 1750 area. Again, in the 30-minute chart, you'll see exactly the same thing, the market declining there. Bit of a bounce going on at the S1 at the moment and trying to get back to yesterday's low. The reason for all of this, the dollar moving strongly yesterday to the upside, heading back to up here where we've got the 109 level. At the moment, we're still only 107. As you can see there, but 109 is the target again on the upside for the US dollar as things start to unravel in Europe. And like I say, God forbid anything happens today with regards to the nuclear plant. Crude oil also moving higher. Natural gas prices also at 14-year highs as well. So already starting to see a build in prices once more as we're heading towards the autumn there. Okay, that's it. Let's hope there's a bit more volatility during today's session, as we've got the option expiration. There's likely to be, that's around 1 p.m. But otherwise, let's see how things fare going into the weekend. And as ever, while I'm thinking about it, if you've managed to stay this long, there will be no market alert on Monday. I will be missing in action and back on Tuesday. Okay, that's it for this one. As ever, thanks for watching. Have a great weekend, and I will see you in the next one.